Okay, everybody, I'm live. It's good to see you. Thanks for coming. Welcome to the room. I hope you're doing well. If you're watching us on YouTube, either now or in the future, do me a favor. Appreciate it. It does help a great deal, and we do appreciate it. Hit the like button, hit the subscribe. We're always putting out those pretty good content. Most of the time, it's good content, and it does help the channel a lot. Helps us get the word out. So a like and a subscribe. I'd really appreciate it. So in any case, let me go ahead and read the legal disclaimer. Today's demonstration is designed to instruct you on using Metastock in the company software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or the information provided in connection with the company. So I hope you guys are all enjoying an early start to summer. I love summer. It's my favorite time of the year. And thanks for coming. Like I said earlier, thanks for coming. We have a very special guest, one of my favorites. Very funny, very informational, very, very good guest. We've had him in a room hundreds of times. And I consider him a dear friend of mine. So with that being said, let's go ahead and get him started. Steve, how are you doing today? Do this. Okay. Okay, Steve, you should be able to unmute your your microphone now.
Okay, can you see me and hear me?
I can hear you.
Okay,
I can see you now, yes.
All right.
We have a question already. Can you see the cloudy forest fire haze here in the east? I can't see it from here, Tom, but we're in Utah.
Yeah.
So.
And I can't see it here just north of Pittsburgh. Show my screen. Here we go. Show screen.
We can see it. We can see. Oh, we could see it. Now we can see it again, Steve.
Okay, good.
So, everything looks good on this end. You're sounding good.
All right. Well, thank you for the invite and welcome everybody. For those that don't know me, my name is Steve Bigalow. I started using candlesticks by accident about 35 years ago. I had been a stockbroker for 8 years and realized that the brokerage firms had no more idea about what made stocks go up or down than anybody else. So I got out of the business, and then somebody threw candlesticks, an antiquated description of candlesticks on my desk, and they said, "You're a stockbroker. Tell me what you think of this." And I figured anything as unsophisticated sounding as candlesticks wasn't worth the time and effort. But they kept badgering me until I picked it up and I looked at it. And the first thing that really whacked me in the side of the head was this all makes sense. And the more I learned candlesticks, the more sense it made. So I've been an advocate of changing people's investment perspectives with candlestick analysis, because prices do, I probably got it in here. So my background is I've written 3 books on candlestick analysis. They're not hard reads. They're just kind of common sense put into words. So what I discovered through the years, also, as we're going through this, if you have questions, don't be afraid to ask as we're going along. Be glad to answer them as best I can. But what I discovered is when I first started learning candlesticks, that was just about when all these financial chat rooms were being set up on the internet. And I'd go back to people and I'd say, why isn't everybody using candlesticks? They make so much sense. And the answers were there's too many of them and they didn't always work. Well, I kept thinking, well, if they didn't work, how come they're still around 400 years later after the Japanese race traders first used them? Then what I discovered is out of the 50 or 60 signals, there's only what we call the 12 major signals. And we call them the 12 major signals because they have 2 very strong aspects. One, they're the ones that occur 99% of the time. And two, when they do occur, they're going to produce very strong price reversals. So I always tell people, you don't have to learn all 50 or 60 signals. You just learn the 12 major signals, and then you're going to have a much more clear perception of what's going on in price movements than somebody that's been trading in the market for 50 years. So there's one very strong element about price movements. Price movements do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's all the candlestick signals are, is the graphic depiction of what's going on in investor sentiment. So we've been able to identify some very high probability trades. And this is what Jeff will probably be going through at the end, showing how Metastock can identify these signals, and not only identify them, but describe what they mean. So here's a best friend signal. Best friend signal is a doji. A doji looks like a little cross, followed by a gap up. So if you dissect what a doji is, it's indecision between the bulls and the bears. And then they've told you with great enthusiasm what that new enthusiasm is going to do. So this one has been one that has been followed in our chat room. I say our chat room, I have a chat room that's it's open all day long while the market's open. And we got 120, 150 people in there every day. But the nice thing is you've got people in there that know what chart patterns to look for, or breakout patterns. And if you're in the learning process, it's a perfect place to come in and say, oh, why did you pick that one? Or what type of pattern is that? You'll have somebody giving you the explanation. Now, when I first started learning candlesticks, it's always good to have somebody around to give you a second opinion to see if you're understanding everything correctly. And there wasn't anybody around. I always tell people back then, the only time I could get a second opinion was when I'd go to the doctor. I'd say, what's wrong with me? And he goes, you're fat. I said, well, I think I want a second opinion. He goes, all right, you're ugly too. So now you've got the benefit of people that understand what candlestick signals and patterns are doing and what the results should be. So you've got the best friend signal. You've got kicker signals. Opens here, closes here, dark candle. They gap it up above the previous day's open and go the opposite direction. That tells you the investor sentiment has been dramatically kicked. Can you give an example to when, hold on, I got to extend this out. I'm trying to extend that box. There is no such thing as one white soldier. One white soldier has been somebody's invention just recently, meaning within the last few years. Remember, what creates candlestick reversal signals is what the Japanese rice traders started identifying starting 400 years ago. So as I was studying candlestick signals, being a greedy son of a gun, I wanted to learn every single signal out there. But then I soon realized you only needed to know the 12 major signals. I never came across one white soldier. Now you've got three white soldiers, which is a pattern, which is one of the patterns that we're adding to the Metastock's search engine, or search capabilities. But there is no such thing as one white soldier. Oh, and I don't even have the chart on here to illustrate that. But anyways, Tom, there is no one white soldier. So kicker signal, one of your strongest signals. Your best friend gap up. So you might not trade JP Morgan, but JP Morgan is one of the indicators that tells you which way the market's going. If the financials are trading strong, that means the market's going to be trading strong. You also have what we call 2+2 analysis. This is a fry pan bottom. The Japanese rice traders illustrate this as a buildup of investor sentiment. You couldn't trade this one way or the other if you wanted to successfully, but the fact that you could see this trajectory setting up tells us we want to get ready to see what happens at the beginning of this pattern. Well, this is what we call a trend kicker signal. Trend kicker signal opens here, closes here, but it's already in the trend. The next day they gap it up and trade it stronger. That does two things for us. One, tells us they've broken out of a fry pan bottom. And two, they did it with a very strong signal, a very strong indication the bulls were in control. So we're getting to it right now. So there's a very simple rule of candlestick analysis, which we can add the T-line. The T-line is the 8 exponential moving average, and it has Fibonacci characteristics. So there's a very simple rule that if you see a candlestick buy signal, and we're usually looking for the buy signals occurring in the oversold area, and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Now, why is this important? Well, if you are like me, if I was lucky enough to be in a bullish trade, what was my biggest fear? Boy, would I look stupid if I let this bullish trade turn into a loss. So I better take profits just because I have profits. Well, the T-line eliminates that faux pas thinking. There's candlestick sell signals, but there's no close yet below the T-line. So this combination is that if the candlestick signals are the graphic depiction of investor sentiment or a change of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful trading strategy. So there's a truism that if you see a candlestick buy signal and a close above the T-line, you have an extremely, and I use this word very emphatically, you've got an extremely high probability an uptrend is being confirmed. Now, the Japanese rice traders have very simple philosophies, which are, where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. If you see a candlestick buy signal in the oversold area, the probabilities are pretty strong there's a bullish trend reversal starting. If you see a candlestick sell signal in the overbought area, very strong probability the bears are starting to take control. So it's not a sophisticated trading strategy, but it's a very accurate one. Same scenario on the short side. If you start seeing candlestick sell signals and a close below the T-line, you can stay short until you see that candlestick buy signal and a close back up above the T-line. So this also has a very strong ramification. But if you see a candlestick sell signal and a close below the T-line, you have an extremely high probability a downtrend is starting. So if you were long and it finally closes below the T-line, take profits, because you've now probably hit a level that tells you that that's where the bears are taking control. That's the high probability area to take profits. So the T-line acts as a very strong indicator that if you see a buy signal, like in here a while back, that's your piercing signal. And how long do you hold on to this one? Very simple, until you see a sell signal and a close below the T-line. Same scenario. If you see a sell signal in the overbought area and a close back below the T-line, you can stay short until you see a buy signal and a close above the T-line. And there is a caveat to that the further away you move from the T-line, the higher the probability it's going to come back up and test it. Do you have to wait until the candles close on a daily chart? If that's your trading style, if that's your trading, I'm a swing trader, so my trades are going to last anywhere from 2 to 10 trading days. So I use the daily charts. However, if I start moving too far away from the T line in the oversold area, what's my probability factor telling me? Yep, we're way too far away from the natural support and resistance level. I might now flip to my 10-minute chart. So the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame, which means they work just as effectively on a 1-minute, 5-minute, 10-minute combination, if you're a day trader, as they do on a daily, weekly, monthly combination if you're a longer-term investor. So what we are going to be doing this coming weekend is we do training sessions. And this weekend, we're emphasizing what trading strategies work the best in specific market conditions. And we start with the strongest signals and patterns, like the best friend signal. Best friend signal, again, is that doji followed by a gap up. Now, if you've got a doji in the oversold area followed by a gap up and a close above the T line, the probabilities are pretty strong that you can stay long until you see a candlestick sell signal and a close back below the T line. Now, people ask, what are my moving averages? This is the 50-day moving average. This is the 200-day simple moving average. We have those on our charts, not to make our decisions about what's going on, but we use those to see what everybody else's decisions are at those levels. Every money manager around the world uses those moving averages to make their decisions about their portfolio. All we're doing is identifying what their decisions are at those levels. As a swing trader, do you wait near the close of a trading day before? How come this? I have to keep stretching this out. Maybe I'm not doing this right. Hold on, I'm trying to stretch out because the questions don't go to this next line. Oh, there you go. As a swing trader, do you wait near the close of the trading day before placing a trade? No, I'll usually wait until the next day, because if we see a candlestick reversal signal, what is the common sense aspect of that reversal signal? We want to see how it opens the next day, confirming that signal. For example, we may not have bought on this day. We may not have found it until we did our scans at night. So what's our next trading strategy? Well, if they open positive, what's it telling us? They're confirming the signal, and they're telling us that the T line is now not acting as a resistance level. I would rather be buying on the confirmation, even though it's not as profitable, my probabilities are much greater that now I'm in the right direction. Does the gap up after a doji have to close? Doesn't have to, no. Remember, anything we have on our chart is a confirming indicator. The most important element on a chart is the signals themselves. So I could take everything off this chart and just use stochastics and the signal, because that's what the Japanese race traders used. Anything else that we add is just helping confirm what the signals are telling us. Now, somebody says, put the XYZ indicator on your chart. If you put it on and after a few weeks you see it's not doing any good, take it back off. Because the less you have on your chart, the more enhanced is the signals themselves. So anytime we see this doji, especially in the oversold area, remember, where do most people sell? They panic sell at the bottom. There's your doji harami. That tells you the selling is stopped. And we have a doji rule, which is the price will usually move in the direction of how they open after a doji. So if they gap it up, that's pretty much telling you they've reversed it. Now you use all your other analysis, like staying above the T line. So again, this is not rocket science. But I always tell people the Japanese race traders did not become wealthy using candlestick analysis. they became legendarily wealthy. They were the powerhouse, a financial powerhouse in Japan for centuries. And they did it on the most boringest of all trading entities, rice. So would you wait until the close of a trading the next day then before entering the trade, as we might gap it up at a market open and then close negative? The answer to that is I'm usually buying on positive trading the next day. So now what becomes my criteria? I don't want to see it close back below the T line. So if I see something like this, a lot of people say, what if I buy it and it immediately turns around and goes the other way? The whole point of candlestick analysis is it's telling you what's happening in investor sentiment. Will that occasionally happen? Yes. And this is the nice thing about candlestick analysis graphics. Not only does it tell you when to get into a trade, but it tells you when to get right back out of a trade that's not working. Had this closed down here after buying it up here, what was it telling us? They didn't break out through the T line, close out the trade. I bet you dive to donuts, every one of you have heard from professional gurus that tell you cut your losses short and let your profits run. Well, I've been trading for over 45 years, and I've never heard one tell you how to cut your losses short and let your profits run. The common sense built into candlestick charts does that for you. So had this closed down here, I'd have closed out the trade. When it closed here, what was this signal telling us? The bulls are taking control. What should I see the next day? It better trade positive. If it closed down here the next day, it's telling us we're still in a downtrend. It's not a good trade. Close it out. Now, through the years, I've been told, especially when trading commodities, if you could hit 50% of your trade successfully on a commodity trade, you'd make a fortune. So when I started learning candlesticks, again, being the worst investor in the world, I was amazed at how often I was in a correct trade. And I couldn't understand why all the negative rhetoric from the talking experts on, or talking head experts on the financial news stations would say, oh, you want to stay away from this sector or this stock or this is bad. Yet the candlestick signals are telling me somebody's buying. So what it really illustrated is it's not, you don't have to listen to what all these supposedly experts are telling you. Let the market tell you what the market is doing. That's one of the strongest advice that the Japanese rice traders provide for us. So when we see this move, a lot of people say, oh man, I don't want to be chasing a stock that's already up 5, 10, 15, 20, 30%. You do if you know what the signals are telling you, that there's now a new strong price move. Let's see. When do you use the 34 EMA? It just acts like a decent, I don't see, I think that's it right there. It acts like a good support and resistance level. It's more effective on commodity charts or currency charts, but it works on candlestick charts. So it's one of those things where it works well enough to keep it on your chart. And as I say, if you've got something on your chart, some people say, well, what about the 20-day moving average? And it doesn't work as well because it's usually you have to have a good steady uptrend for the 20 to work. And a lot of people will say, well, why not use the 50 exponential and the 200 exponential? Aren't they better? We're not using those moving averages to make our decisions. We're using those moving averages to see what everybody else's decisions are. I think it's good to switch to lower time frame to get confirmation. You can always do that, yes. If you're worried about getting into something the next day, we'll flip to your 10-minute chart saying, well, it's open positive, it's confirming this signal. Whoops, my 10-minute chart is still working. Yeah, let's go ahead and buy. So this is not anything unusual. We call it your best friend because we've got the top ranked signals and patterns, which we're putting onto Metastock's search information. But if you see a best friend signal, the probabilities are, the reason we call it your best friend is because there's three major elements. One, the probabilities of it heading in the correct direction is pretty strong. 2, the magnitude of the move is pretty strong. And 3, the frequency is strong. It's not a signal that you have to wait weeks or months. These type of signals almost occur almost every single day or every other day. So you've got a constant supply of good, strong trade setups. So you've got the same scenario on the downside. The bigger the signal, the more compelling there's a downtrend. This is what we call observe the obvious. Notice how the doji, which is an indecisive day, just touched the 50-day moving average. And then the doji rule the next day said if it's opening lower, it's going to trade lower. Well, what did that tell us about the 50? It's not going through the 50. It's still in this downtrend. So whenever you see kind of that little bearish best friend, tells you there's probably going to be more downside. I was about to enter into a trade today that jumped on open and then closed as an inverted hammer at overbought RSI. Yes, there was plenty of those today where they gapped some up, and I think I even have some on here. And that's another indication of how you use the candlestick signals to tell you when it's time to take profits. So there's also patterns, what we call the J-hook patterns. The J-hook plus, and the Bobble breakout. The J-hook is a strong uptrend, pulls back, and does a J-hook, meaning wave 1 and wave 3 are usually going to be the same. So if I see something like this, and then we see sell signals, and it pulls back, and then it starts back up doing this little J-hook, we kind of configure wave 1 and wave 3 are going to be about the same magnitude. Now, why is that important? First of all, let you know whether it's worthwhile getting into this trade. If this was a 8% move, this might not be worthwhile getting in something that's going to take weeks to make 8%. But if this was a 40% move, and this is now another 40% move, now you've got a bunch of different option strategy or strategy options. You can buy the stock, you can buy the calls, you can buy spreads up here, knowing where your likely target's going to be. So a lot of people say, well, when do you get into a J-hook pattern? Well, if you can see it setting up, here's one of your strong bullish signals. Doji sandwich, a bullish candle and a doji. The next day they trade positive. This candle right here is usually the same as this candle right here with a sandwich or the doji sandwiched in between. And that implies there's going to be more upside. So you could be buying here, and then what's your next strategy? You want to see whether they can get through this level. If they did a sell signal up here, like a shooting star or a doji, and then fail, what do you have? You have a double top. If it goes through, what can we imply from that? Wave 1 and wave 3 are going to be the same. So look how this first wave started. There's your bullish best friend in the oversold area, close above the T line. There's your bearish harami telling you the buying has stopped, so you get out of the trade. But then look what happened right here. There's your kicker signal, which is one of your strongest bullish signals. Starting back up, what can we anticipate? Well, if this is setting up for a J-hook pattern, starting with one of your strongest bullish signals, what can we assume is your next target? Well, if this is wave 1, we can assume the 200 is the next target they're aiming for. Al, that's what our chat room is for. We've got people in there that day trade, swing trade, and longer term investors. We also have another chat room that is oriented strictly to the option traders, where you pick up different strategies. So that was the whole purpose of setting up the Candlestick Forum, over 20 years ago now, is just to teach people the different signals and patterns that work effectively. This could be a 10-minute chart. If this was a soybean chart and I was buying right here, I'm taking profits here, and then I'm buying back in right here. If this was Apple on a daily chart, You could be day trading at on your 1 minute, 5 minute, 10-minute chart combination. So anytime you see this, notice what the T line provides for you. If they haven't been to close below the T line and they're taking it back up, we can pretty much assume that after your best friend signal, consolidation, wave 1, wave 2, and the fact that they couldn't close below the T line told us we had an extremely high probability that wave 3 is about to start. And why would we assume that? Because this told us there's strong bullish sentiment. This told you there's profit taking, and then there's the continuation of your strong bullish sentiment again. So this is where the T line magnifies your analysis. It came up right to a resistance level. They did a sell signal, an evening star signal. But notice what they did when they got back to the T line. They couldn't close it below the T line. So we could already see they were starting to back up. So when it broke out through this level, what do you think everybody else and their brother was watching? They were going to see whether it broke out through this level. We were already getting set up for it because we knew it was doing a J-hook pattern. We're buying here or here immediately, where everybody else starts buying because they have confirmed they're going to go through the resistance level. So there's an added benefit to the J-hook pattern, which we call the J-hook plus. If this is wave 1, look where it pulled back to, right smack dab on the 50-day moving average that everybody is watching. And this is a left-right combo. That's a doji followed by a bullish engulfing signal. And then they gap it up. So what did that tell us about the 50? That was exactly where they were buying. What did that tell us about the next price move? Well, this is one of your strongest reversal signals, followed by a gap up, which is even enhancing that reversal signal information. Which tells us wave 1, wave 3, and notice what wave 3 was doing. Notice how often the T line acted like a support level. Look how many days it came right down to the T line. Now, why is that significant? Because nobody has the T line on their chart. We use it because we've discovered it acts like a natural support resistance level of human nature. So anytime it pulls back to that level and bounces back up, we've got that additional confirmation that the bulls are still in control. Came up through the 50, pulled back. Now there's your morning star signal with a doji, bullish candle, right smack dab off the 50. What does that imply? Wave 1, wave 3 is probably going to take you up here to the 200-day moving average. The T-line strategy works best on trending markets. What about choppy markets of today? That's what we're doing Saturday, showing you the trading strategies that work effectively no matter what the market conditions are. And if you're looking at something like this, where it's bobbing up and down above and below the T-line, what's that tell you? It's telling you not to try to figure out what it's supposed to be doing. It's telling you what it's doing. It's moving sideways. That's a choppy market. Maybe you're not trading all long positions or all short positions. Maybe if this was the market index, let's say the Dow or the NASDAQ, it's telling you, oh, I better have some longs and shorts on in this time frame. So we just did this trade. Whoops, I didn't write it on here. WAL. I think it's one of the banks. But this is what we call a J-hook plus. Came up through the 50, pulled right smack dab to the 50. Stochastics coming up, little best friend signal. What's that tell us? Well, if they're supporting on the 50, where do you think their next likely target is? Up here. So this is what makes for high probability trade setups. So a more enhancing J-hook pattern is what we call the Bobble breakout. Notice how the 50 is acted as resistance. And notice our little J-hook Bobble breakout. A Bobble breakout is they come right up to a resistance level and they pull back. And once again, yes, Saturday will be recorded. They pull back, and when they came back up through, what did that tell us about the resistance level? Well, we knew if they came back up through this level, we had a high probability there was a J-hook Bobble breakout. We can be buying right here. So that usually brings up the question, well, why are you buying when you're in the overbought area? Because usually you want to be buying the signals itself, the signals in the oversold area. Usually you're buying a pattern breakout when you're in the overbought condition. Now, I use stochastics of 12.33, and that was nothing more than me being a swing trader. Decades ago, I sat at my desk, which was at that time in my living room in Atlanta, Georgia, and I thought, well, 14.55, what seemed to be the standard at the time, was a little bit too slow. So I sat there for 20, 30 minutes and said, well, let's test. Where does the bottom occur and where does the top occur? And I did 14.52, 14.3, 4, 12.5, 4. Finally came up with 12.33. And that's worked extremely well over the last 30 some odd years. So back to, yes, Saturday's session will be recorded. Now we advertise it as we start at 10 Eastern time and it's supposed to end at 2 in the afternoon, but they never do. You'll be lucky to get out before 2:30, 3 o'clock, 3:30, and we go as long as there's questions or people need clarification. So it's not the type of training of here's the information, you understand it. I always teach on the basis that here's the information. All right, what can I show and do to make sure you understand it? And sometimes in the wintertime when it's crappy to go outside, they go to 5 o'clock in the afternoon. So this is what we call a Bobble breakout. You can see how it pulled right back and then did a kind of a doji breakthrough of this resistance level. Where was the next target? The 200. What did it do at the 200? Just stayed above it and did a bullish engulfing signal. So this would be called a Bobble breakout. This would be your J-hook plus. So again, this is not rocket science. This is just taking advantage of what the Japanese rice traders have illustrated for hundreds of years as what the high probability reaction of human nature give us as far as high probability trade setups. So today we started buying Wolf because you can see exactly what's happened. It came up, failed at the 50, and notice what it did when it pulled back to the T line. Doji, 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 but they couldn't close it below the T line. So when they brought it up through this level, what could we see? We could see the Bobble breakout. So we bought some here, we'll buy more if it opens positive. Because if it opens positive and trades positive, what do you think everybody else is watching? Oh, we're waiting to see if it gets through the 50. How often have you been told not to buy, or how often have you heard other people say, well, you shouldn't buy something if it's trading below the 50 or the 200? Well, that's a bunch of poppycock. You're not trading the 50 or the 200. You're trading the price movement. The 50 and the 200 just become levels that everybody else is watching. Type of signals and patterns are setting up. Same thing on PBF today. Look what happened. It did a bullish engulfing signal, did a Bobble breakout. What's that imply? Wave 3 is likely to be the same as wave 1. So these high probability trade setups just need confirmation. This is your fry pan bottom, and we're looking for that breakout of these fry pan bottoms, and this is what we expect. Now, the rhetorical question always is, do you always get big price moves coming out of a fry pan bottom? And the answer is no, except the probabilities are pretty strong. That not only are you going to be in an uptrend, but you're likely going to be in situations where you are in these big price moves. So you might not know what the heck this company does. All you know is somebody is buying it. The opposite is true in a downward trend. If you have a doji closing above the T line, would you still buy? Well, if I could see that the doji was forming above the T line, I probably wouldn't buy it, especially if it was near the end of the day. However, if I've just had a buy signal and then a doji that closed above the T line, I know if it opens positive the next day, the doji rule says it's going to trade positive, and more than likely it's going to do a doji sandwich, meaning it's going to do the same magnitude move as the candle prior to that. Yes, that's when I'd be buying. And then I have another aspect of candlestick analysis is it gives you very simple instructions on where to set your stop loss. So if it opened positive and started trading positive after a doji, then it should trade positive. Where shouldn't it trade or close? Back below the doji. If it does, you close it right back out. So when I finally learned how to use candlestick analysis, I'm thinking, this is great. The probabilities of being in the right trade at the right time is immense. And then there would be trades that didn't work. And I'm thinking, what have I done? Am I stupid, or did I not see something? But then I realized that even though 70% of the trades are probably going to work, now they may only produce 0.3%, or they might produce 300%. But 70% seems pretty good, but there's another element to successful investing. 30% of your trades probably aren't going to work. Once I realized that, I got rid of that emotional stigma that if something isn't working, close it out. That's part of that 30%. It's not anything that you did wrong. It's just 30% of those trades aren't going to work. Close it out quickly and move on to something where it has a much greater probability of moving positive. So a dumpling top is the opposite of the fry pan bottom. A big rounding top, and then look what happened here. They started gapping it down. So like the fry pan bottom, it's going to produce a big price move. We did the same thing just recently on DG. We're still Dollar General. There's your dumpling top. And when did this become evident that this was a dumpling top? When it started closing back below the T line and they started selling off. We're still short. And this is where, if you're an option trader, you got extremely high probabilities of a good price move working in the right direction. So candlestick signals are proven results. These aren't things that are made up. These are things that we're looking at that have evidence of expected results, like a kicker signal on Moderna. When that kicker signal occurred right here at this level, what does a kicker signal tell you? There's been a drastic change of investor sentiment. You can stay long until you see a sell signal and a close below the T line. Now, this may have been a bad hair day, a scary day, but what did it do by the end of the day? Closed back up above the T line, telling us now we have a J-hook type pattern. Look for the next move to the upside. When did you take profits? Well, there was your doji, your shooting star, and then you close back below the T line in the overbought area. That was where the probabilities were saying, let's take profits and move on to something better. Slow stochastics. I've got an inverted hammer on the oversold RSA a few days ago, but stock has not yet closed above the T line. Oh boy, I'm on the PowerPoints, Usman. Yeah, so wait until it confirms by closing above the T line, especially if you're in the oversold area. Works just as well on the downside. If you're in an uptrend in the overbought condition and they're opening it, gapping it down, close it immediately. Because that tells you there's been a major change of investor sentiment. Notice how this uptrend started. There's your bullish best friend signal. So the way I learned candlestick analysis was back even before candlesticks were on the computers. I would get a charting service out of California that would arrive in my mail on Tuesdays. And if I was trading hogs or the dollar or something like that, at the end of each, or on the right-hand side of those charts, I'd use my little mechanical pencil to make the formations. And so the right-hand side of my charts were always looking like chicken scratch. But the way I learned candlesticks was what was happening down here in the oversold area that started this uptrend. Oh, let's see. Oh, that was a bullish engulfing. That was a bullish engulfing. And so I'd go through hundreds of charts and realized, again, there's only 12 signals that we're looking for. And if they were occurring in the proper place of the stochastics, it told me I had a high probability of a reversal. Can I use RSI? Yes, use whatever you want. We're not trading RSI and we're not trading stochastics. Obviously, a candlestick buy signal in the overbought area doesn't mean very much. A candlestick sell signal in the oversold area doesn't mean very much. The candlestick buy signal should be occurring when you're in the oversold condition. So whether you want to use stochastics or RSI, it doesn't matter. Or if you want to see which one works better, throw both of them on your chart. Remember, the top criteria for candlestick reversal signals is the signal itself. We're just making sure we're seeing it in the right conditions of the market trend. This is called a trend kicker signal. Notice your trend was already in progress. They basically opened it at the same level that they opened the previous day and went down. Now they gapped up and went the opposite direction. So what was that telling us about our fry pan bottom? Especially right here. They were breaking out. They were telling us the 50-day moving average was acting as a support, gave us that much more evidence that this fry pan bottom was working. A Bobble breakout. Where would be the next likely target? The 200-day moving average. So learning these things puts you in situations where not only are you in trade setups where other people might say, oh, I'm not chasing this one. You know exactly what the next price move should be. Wave 1 and wave 3 are usually going to be the same magnitude. You can also use it on your day trading. If you see something breaking out, there was news that said they just not got a new contract or they just got approved on a one of their drugs. Do you buy here? Do you buy here? Do you buy here? That's where you flip to your 10-minute chart. Say, oh, I can be buying here. I can be buying here. Oops, I'm not buying here. Maybe I'm taking profits, but there's my next buy setup. I'm buying back here. And how long do I hold the trade going into the close? Notice that they could never close back below the T line. You see a big breakout like this. Where do you know when to take profits? Well, what's the first thing that you should be analyzing? Remember what we said about the T line? That the further away you move from the T line, the higher the probability it's going to come back and test it. Well, how do you know when to take profits here? You go to your 10-minute chart. The 10-minute chart looks just like a daily chart, a 1-minute chart, or a weekly chart, any other time frame. So if you were buying in here, what was happening up here? Look how far away you are from the 10-minute T line in the overbought area. So if you're that far away from the 10-minute T line, and you're that far away from your daily chart T line, what should you be watching up here? Well, there was a doji telling you there's indecision. If they opened it here and started trading it up, you could put a sell stop right here, take profits. Worst case scenario is if they came back down through the bottom of that doji, who's in control? The bears are starting to take control. And why would we suspect that? because look how far away you are from the daily T or the 10-minute T line, and look how far away you are from the daily T line. With that knowledge that the further away you move from the T line, the more likely they're going to come back and test it, tells you, oh, let's take profits. It could come back down here and do a J hook, but why should we risk it? Let's take profits and see what it does once it gets here. So these are the type of things that we look for. There's your fry pan bottom. There's your breakout from the T line. There's when the buying starts. And there's where you start taking profits. So how often do you get into a situation where you could be buying it around the $7 range and coming out at the $32 area? That's what the whole purpose of Japanese rice traders charts are telling us. It's not telling you what everybody thinks the fundamentals are of this company, because you got tons of people out there saying, oh, this could go through the roof, or it's way overbought. What we're looking at is what everybody's decisions are, not what one person's analysis is. My favorite market I trade is a short term. Yep, the crude oil. Yes, you can. We occasionally trade crude oil off the 10-minute chart. So there's what we call the J-hook plus. Look at your left-right combo in the oversold area. Look what happened when they came up through the 50. Well, we can see that they pull back, and if they come up through a resistance level, what's one of the normal human nature reactions? They pull back to see if it's going to act as a support level. We can see that there was a doji, and starting back up, we could be buying here, even though we're up here in the overbought area, because what's our anticipation? Wave 1, wave 2, wave 3. Oh, I didn't realize we're... No. So this is what we call a McMuffin. There's your morning star signal. Morning star signal is a big down day, a day of indecision, in this case, a little inverted hammer harami. And that day is a big candle that closes more than halfway up this candle. That's one of your 12 major signals, the morning star signal. That implies, from the Japanese rice traders' historic results over hundreds of years, that is probably an uptrend. Then look what follows it. Big candle, a doji, a big candle, your doji sandwich. What's the implication of a doji sandwich? More upside. So you've got a morning star signal implying more upside, a doji sandwich implying more upside, or your morning sandwich, your McMuffin. That's a high probability. That's why we recommended this, because where do you think the next likely target's going to be? Up here. Now, where is that? Why do we make that a target? Because that's probably what everybody else is watching. What else is everybody else is watching? Well, you could put the Fibonacci retracement. People say, well, do you use Fibonacci retracement? We don't use it to make our decisions. We use it to see what everybody else is watching. Because let's say the 38% retracement was right here, and it got up to that level and did a shooting star and started backing off. That meant when it hit the 38% retracement, that's where people started selling. We just use them as potential targets for identifying what signals are happening at those levels. So here's the common sense aspects of candlestick analysis. There's your kicker signal, breakout. Where do most people buy? Where's the time to be buying? When you see a strong buy signal with stochastics heading up. Where do most people buy? They buy exuberantly at the top. What's that tell us? When they've gapped up and moved that far away from the T line, it's time to start taking some profits and moving on to something better. So candlestick charts have not the projection, or if you're listening to Kramer or all these people out there making projections, I kind of laugh at some of these gurus on TV, on CNBC or Fox Business News that say, oh, I think Apple is fairly valued at such and such a price. That doesn't mean a hill of beans. The only thing that's going to make you money is knowing what the price move is going to do, not what somebody's projection is. And that's what candlestick charts tell you. It tells you what everybody's actual sentiment is, not what the projections are. Wow. So if you see a pattern like this, notice what this told you. There was a new investor sentiment coming into this price move. Kind of consolidated. Where did it consolidate to? Right smack dab to the T line. What it tells that this breakout with new investor sentiment after consolidation is now going to start moving. Now, somebody said earlier something gapped up and then it started selling off. Same scenario. Where was the time to take profits on this one? Well, notice they gapped it up today and took it up. That was good. Happy, happy, happy. But as soon as it came back down through the open, after gapping up, what was our alert to be ready to start taking profits? The fact that they gapped it up in the overbought condition. As soon as it came back down through this level, we started taking profits. Because at this point, what are the probabilities telling us? We're in the overbought area. We just had a big bearish left-right combo. That told us the probabilities are going against us. So when you see a pattern set up like this, what's that telling you? There's new interest coming in. So that's the same thing we're looking at on UCAR. There was the alert. There was the profit taking. Now the profit taking is over. This puts us in a situation where the probabilities, if they start trading positive, not only has a good probability of trading positive, but look at the percentage move. Up here was up over $30. Well, you might be buying here at the, whatever it is, the $9 area, with at least the first target being up here at 15. So not only are we able to identify where the high probability trade setups are occurring, but which ones have the strongest magnitude of returns. So this is what we call 2+2 analysis. We started buying AI. Well, we bought AI over here and took profits up here, especially when they gapped it down, because look where we were compared to the T-line. In the overbought area with a doji, if they were trading back below this level, what did that tell you? Close out the trade. Where was the first likely target? Back to the T-line. Well, they kept selling it off, selling it off. Remember, there was all this argument out there by people like Elon Musk that says, oh, artificial intelligence could destroy the world. And everybody said, yeah, let's get out. But what's the rationale? Artificial intelligence isn't being developed to destroy the world. It's being developed by companies that will improve their productivity, or in this case, AI, setting up services that help companies see how they can improve their productivity. So they're not trying to develop artificial intelligence to destroy the world. They're trying to set up artificial intelligence to improve people's profitability. So you can see what happened down here. You can see the fry pan bottom. And again, observe the obvious. Look what happened right on the 200-day moving average. They weren't going below that level, and as soon as they came back up above the T-line, stochastics coming up, the probability said, well, we're going higher. Look at our little trend kicker up through the 50. Look at our doji sandwich. And then look where we took profits. They were gapping up in the overbought condition that far away from the T-line. We closed out some here, we closed out some here. But now we're starting to buy back again because this is what we call the classic pattern. A classic pattern is a fry pan bottom. What is our expectation coming out of a fry pan bottom? A strong price move. A J-hook pattern. What's the prerequisite for a J-hook pattern? A strong price move. So as soon as it came back down to the T line, the probabilities are pretty strong it's starting back up, because what caused it to go up this much the first time? Strong bullish sentiment. Then there's profit taking. Now, if they start taking it back up, why? Because there's strong bullish sentiment. No. The crossovers of moving averages don't mean a hill of beans. Now, you can use it to confirm that the candlestick signals or patterns are working, but don't use it as a top criteria for making investment decisions. So there are a lot of strategies, no matter what your market conditions, or that you can benefit from market conditions. So that's what we're going to do this Saturday. There's approximately 7 strategies, like the fry pan bottom breakouts, the J-hook patterns, but also the dumpling tops, or the support and resistance level. You can see obviously what was happening right here at the support level. Anytime you see something happening at a support level, we can analyze, and that's the whole purpose of candlestick analysis. We can analyze what type of charts or what type of investor sentiment are happening based upon the charts. And if they can't close below this level and they come back up above the T line, what do we know about our probability factor? We're heading higher. That's a cup and handle breakout. Yeah, you can call it that if you want to. Usually a cup and handle is like this, and then right here, this is more what we call the classic pattern. All right, so if you want to join us Saturday, the session's recorded, and I always go on the mantra that you're going to get a heck of a lot more information than you expect. But it's not like you have to learn formulas. We go through hundreds and hundreds of charts, so that the learning process is merely identifying mentally what's happening in your in a chart pattern. Now, we've got a very tricky marketing concept that instead of paying $297, if you join the Candlestick Forum for $97, now your price goes to $197. But at least now you've got at least 30 days by being a member for that $97 to see how the chat rooms work. I put out 2 or 3 stock recommendations every evening. If the market's heading up, they're likely to be bullish recommendations. If the market's heading down, they're likely to be bearish recommendations. If the market's moving sideways, you might have 2 longs and 2 shorts based upon how the market's moving the next day. The nice thing about candlestick analysis is the graphic, or the scans for the graphics, is so simple. And that's what Jeff will probably go into after I get done here. That out of 9,500 trading entities out there, on any given day, in less than 20 minutes, you're going to be able to find 6, 8, 10, 12 good bullish chart patterns, or 6, 8, 10, 12 good bearish chart patterns. Now the process becomes, all right, I've got 6, 8, 10, 12 good trade setups. Now I can just go back through and do a quick cultivation and say, all right, which ones of these are the strongest of these signals and patterns? So I've always got a constant supply of good trade setups. So as a swing trader, as soon as I see something that's time to take profits, I don't have that fear of missing out stigma. If it's time to take profits because the probabilities are starting to go against us, I know I've got some place to go to that have better probabilities. So with that, let's see, Jeff, do you have the link to show them how to?
Yeah,
okay.
If you're watching on YouTube, click on the pinned link up at top. And if you are, and the link should be, if you're watching a GoToWebinar, it should be just in the question section. And we posted it a few times. So, and as somebody that's been through a lot of Steve Bigalow training, Highly recommended.
So the whole point of candlestick analysis is it gives you a completely different perspective. You don't have to listen to experts. You don't have to know formulas. You don't have to know all sorts of technical analysis. All you have to do is learn the signals and patterns, because that is what moves prices, is investor sentiment. Everything else is just a function. People ask, well, don't you look at the fundamentals of a company? No, I look at what everybody else's decisions are based upon those fundamentals. So that's about, I didn't want to do that. That's about all I got. Are there any final questions before Jeff comes on?
We have a question on how to scan for patterns, but I'm going to talk about that for a few minutes.
Okay.
Like, how do you find the patterns is a question we get every time. So, but yeah, so you can get 297. Go to stephenbigalow.com/TMC. It's a full day session on Saturday, and highly recommend it. So stephenbigalow.com/TMC. Just click on the links in the chats. Steve, thanks.
All right. Thank you, everybody. And if you have any questions that I didn't clarify, just email me, steve@candlestickforum.com. I'll be glad to answer them. Thank you, Jeff.
You bet. Thank you. And as promised, let me go ahead and kind of tackle how to actually scan for the patterns, because one of the things that we've worked on with Steve, and thank you again, Steve, before I cut you off at this time, kind of take over. I really appreciate everything you've done over the years. Been a great business partner. Love your patterns. Learned a lot from you. I appreciate it.
Thanks.
All right. Very cool. And one of the things that I do want to kind of show off for just a few minutes is the candle profit systems 2.0, which we've spent a lot of time actually going through and working with Steve to kind of design his patterns out and kind of get it into a product. And oh man, we did the first version of this about, you go ahead and take that out because it gives a little bit of feedback to me. We did the first version of that over probably 10 years ago. I remember we were working on it. We worked on it for a couple of years. It was a lot of patterns are really easy, like a doji best friend is a doji followed by a cap up. But like some of them are quite a bit more difficult, like the right hand bottoms, the Bobble pattern. Not the Bobble patterns, but some of the patterns are a little bit more subjective and not objective. And so we were hand in glove with Steve to kind of create the add-on for our award-winning Metastock program that allow you to kind of find and identify and see these patterns. And so I'm going to just basically show it to you. First, I'm going to kind of show you all the patterns that are included. So right here, you've got the fry pan, bullish and bearish bohos, the T-line crunch, the doji at the top, the doji best friend. All of these patterns are basically part of the software. And I'm going to show you what that means and kind of how that means that you can scan for them. But it makes it very, very easy. So in addition to those multiple day patterns, there's these single patterns. So to just show you kind of what that looks like on a chart, I've got a chart of Meta, which has been a really good stock this year. Absolutely. But anytime you see one of the patterns actually forming on a chart, it's going to show up. So here you had a bit of a doji sandwich, as you can see here, a slow curve, a bull kicker. All these are kind of labeled automatically by the software. So immediately they're going to have, today we have a left-right bearish combo. A couple days ago, you can see there's a doji at the top. So as you're kind of looking at the platform and kind of looking at the patterns, it's going to help kind of point them out to you, because it's a little bit second nature at first. I would have saw this and maybe not seen that was a doji followed by a gap down, or a doji at the top. So not only does it identify it, what it also does is help you understand what it is. So today, like I said, we had that left-right bearish combo. If I come in here, we have in Metastock expert commentary. I'm going to go ahead and open that up. And when I do that, it's going to highlight the initial. So right here, it's going to say the left-right combo bearish is a doji followed by a bearish engulfing signal. It tells me what I can do if I want to take advantage of that, and some enhancements for what that is. Now, there are a couple patterns in addition to that being a left-right combo. There's also a bearish engulfing, so it's going to label that as well. So all those patterns that were kind of in those two PowerPoints, I think there's about 35, 36 of them are identified right here on the chart for you. There's an English definition that you can kind of go in, open up, and it'll tell you exactly what you mean. And of course, one of the things I love about Metastock is the scanning engine. So if I'm a trader and I want to go in and find all the doji best friends, for example, or all the left, right, bullish combos, and just make a list that I can look at instead of looking at all the stocks, but just find stocks with a pattern, it's very, very easy for me to do. All I have to do is I click on our Power Console right here. I go to the scanning engine, which we call Explorer, and I'm going to do a scan for the Doji Dynamo, just to show you how easy this is. So if I highlight over it, this is going to find the Doji at the top, the Doji best friend, the left, right, bullish and bearish combos, a series of Doji. This is what this will run. And there's about 5 or 6 of these. We broke them up into different patterns simply because, well, we couldn't fit them all into one scan. There's like a lot of different patterns that are in here. So we'll go ahead and do the Doji Dynamite. What I've done here is I've decided to run it against the Dow Industrials, the S&P 500, and the NASDAQ 100. And I'm going to go ahead and start that, and I'm going to go ahead and let it run. Okay. Now, I want to make a couple points. If you're watching us from India, for example, you want to look at the NSE stocks, you can do that because we do have the data. We get it from Refinitiv. If you're watching us from London or Australia, the bottom line, if you're doing futures, you can use this. It works with just about any market on Earth. There's hundreds and hundreds of markets that we cover with our Refinitiv data connection. So I'm showing obviously US stocks, but we do get a lot of Indian customers that are watching us, usually a little bit earlier in the day. We also get a lot of Europeans, a lot of Australia. Regardless of what markets you want to apply this to, you'll be able to with the data that we provide. So right here, I've got kind of the scan matrix. And out of that 600 stocks, if there's a 1 in any of these doji at the tops, that's going to mean there's a pattern there. These are all zeros. So there's no doji at the tops. There's no doji best friends here. But if I'm looking for a left-right bullish combo, here's a couple stocks that are here, Air Prods and Chemical, APD, or MLM. So I can very, very easily, this is the left-right bearish, series of bears, series of bullish, the doji sandwich, the bearish doji sandwich, the muffin. I can very, very easily find different opportunities. So if I kind of like, okay, well, I don't have any doji best friends, let's go ahead and take a look at MLM. It had a doji best, or a left-right bullish combo. I can go ahead and open that chart from the chart here. But the point is I'm not going through all, and you can see right here, go ahead and kind of move this over. Right here is that left-right bullish combo. Okay. Yesterday you had a doji by an engulfing bull, and then that caused left-right engulfing combo bullish. Okay. So if that's a stock that I like, actually, I can go ahead and kind of take a look at that. But instead of looking at all 530 stocks, I was able to run an exploration. And I love that about Metastock because, as an option trader, there's 4,500 optionable stocks. And it's really, really nice to eliminate most of the stocks and just look at the ones that have an opportunity they might be interested in. So, Joe, thank you for your question. Does scanning work with the Forex market? Absolutely. So we do have quite all of the pairs, really, and we do have a list of all the common pairs. And if I wanted to actually kind of scan the Forex markets, I don't have that list actually loaded, but let me just kind of make a quick change here. Let's remove all, save and close. I'll just load the whole list, which is a very easy thing to do. But you'll see once that list actually reloads to all 321,000 units or instruments, Forex is absolutely something. See, right, what we've got is we've got about 413 pairs. But if I just wanted to do the major pairs, there's about 36 of those. So if I wanted to run that scan on the Forex market, Joe, now I might not hit any hits. Actually, there is one. So CAD JPY had a doji at the top. So absolutely, you can run that scanning process. We just did it. It was that easy. So you can do it on Forex. You can do it on just about any market on Earth. You can do it on futures, any market. Thanks for the question. So, and again, I think that's a good highlight. It does explorations, scanning. It does identify the patterns on the chart for you. It tells you what those are, what they mean, exactly what to do. And there's all of the patterns that Steve talked about today. So you've got the fry pan. There's a list right here. I won't read it down. But it's been a very, one of our most popular, definitely the most popular I've brought out here. And people really like it. But I think they like it because Steve is a really good teacher, but he also does a really good, his patterns really good. So, on the add-on itself, if you don't have it, you should definitely get it. It includes 6 explorations, the expert advisor, 3 different layouts, and in total, I said 35 to 40 patterns. I was right, 36 patterns. And it's a one-time cost. So if you pay for it, you'll own it forever. So it's normally $4.99. We do a special where we are going to offer a $100 discount for the next week. $399 is what you'll pay for it as part of that special. We offer that with a money-back guarantee, so you can try it out. If you don't like it, you can return it. We'll give you a refund. No question. Well, we're going to ask you why you didn't like it. I say no questions asked, but if you don't like it, we want to know why. Because a lot of times, if you don't like it, it's just because maybe it's something we can help you with. So, but there is a money-back guarantee if you're not happy with it. So, we also, one of the things that we're also offering is back in December, Steve and I sat down and we did a training course called the Candlestick Training Bootcamp. And we're going to offer you access to all 10+ hours of that training that we did. And there's also a 1-hour bonus. So if you want to do that, you can do just that by itself, which is $449. And that's great. If you're already on Candle Profit Systems, and haven't gone through this class, this is a great class. You can also do the class that he's talking about on Saturday. But if you're brand new to Candlestick Profit Systems and Steve Bigalow, you just want to try everything out, what we've got is what we call the Candlestick Forum. So with that, it'll include the Candlestick Profit Systems 2.0, that training boot camp, which is the 10 hours of training. If you do Metastock, we'll throw in a free month of Metastock as part of it. You'll get free data from our award, from our institutional quality news service and provider. We'll actually give you some training to help you get everything up and running. We'll actually do a one-on-one installation service call with you, where we'll sit down with you and kind of walk you through any questions you might have. All of that, normally if you just bought it separately, it'd be $13.98 at the event today. And for the next week, we're going to do $6.98 as a special. So to take advantage of that, you can call us. The phone number is 800-882-3040. You can visit us online at metastock.com/saleschat. And you can also do that at metastock.com/candlestick. I encourage you to try it out. It has been such a great add-on. We had it reviewed twice by Stocks and Commodities magazine, once by Dennis Peterson and once by Barbara Stroud. Both of them. Dennis Peterson did version 1 and Barbara Stroud did number 2, but it was rated very highly by both of them. It's awesome, not just of the Metastock programs. Metastock's been rated number 1 in its price category for 30 years straight. The Candle Profit Systems 2.0 is actually won best add-on for any platform, a couple of times by Stocks and Commodities. So you can do that. You can give us a call, 800-882-3040. You can go to metastock.com/saleschat, or you can visit us online at metastock.com/candlestickforum. So hope you give it a go. This entire offer for the CPS 2.0 purchase is a 30-day money-back guarantee. So give it a go, see how it works for you. Give us a call, 800-882-3040, or metastock.com/candlestickforum. Hope that was helpful for you. Thanks for coming. I'm actually going to type this up real quick into the chat here. I can't talk about it. Anyway, thank you again, Steve, for everything you've done over the years. We really appreciate it. Thanks for coming. All of you, if you're watching us on YouTube, you thought this was a great video. I thought it was good. If you liked it, hit the like button. If you didn't, hit the dislike button. Subscribe to the channel for more great videos like this. Hope to hear you again, or hope to see you again. Thanks for coming, guys. We'll see you next time.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.